There is a debate going on, sir, between China and America, and within it is the triangulation of finance within China, the ever-hoping dream to have Shanghai be the center of finance, but it seems to me to always be Hong Kong, Hong Kong, Hong Kong. What are you getting right at the Hong Kong exchanges?
I think it's really Hong Kong, being part of the one country, two system is trusted by China. But meanwhile, because of the rule of law, because of the open market, because of all the great things that Hong Kong is about, the history, and we are also absolutely trusted by everybody else. So that's sort of a unique role of being able to translate and convert two vastly different systems, but systems that need to integrate is really the business model for Hong Kong.
What is your best practices to attract something like China Tower with the many billions of dollars that it is? What is your best practice, your single best practice, I should say, to compete against someone like the New York Stock Exchange?
I obviously, from a market demand perspective, from a market access perspective, from a market rule of law and everything else, we're broadly similar to the New York market. But the key difference is many of the big Chinese issuers, feel from a distance perspective, geography perspective, linguistic, cultural perspective, it's just much easier to do a transaction here. So here in Hong Kong, that represents the best of both worlds. You have the convenience of Hong Kong, the familiarity of a Chinese culture, and the geographical, proximity. But meanwhile, you're a completely open market. You're completely, a Western rule of law where international investors have absolutely no issues in accessing to this market. So that really represents the best of both worlds, and that's why both issuers and investors congregate in Hong Kong over the last 25 years now.
Mr. Li, China Tower is the biggest IPO in 2 years. The company priced it at the low end of a marketed range. Is this a trend to come, and is this a pure trade tension side effect?
No, I think, generally speaking, we are dealing with pretty overall choppy market environment that clearly have, impact on the sentiment for IPOs. During the IPO roadshow, we all know it's a momentum. It's really an issue of momentum. When you have a broader positive market, you can price it at the more aggressive end. And when you are seeing very choppy market, where market broadly speaking have no directions, you start to see IPOs tend to sometimes become more conservative and wanting to make sure they get the deal done rather than get the best dollar out of the table. So I think we're going to see a few deals like that. This is not dissimilar in New York or other markets. But this is just the nature of things. It's a very big transaction. It's the largest tower company in the world today. And I think it's very substantial. I think the most important thing is a deal of that size get done in this kind of market itself is really speak volume of the viability of Hong Kong market for both China and the international market.
Right, but Mr. Li, you pointed to the market jitters right now. Does it mean that the pipeline for IPOs is also drying up?
No, the pipeline is very, very strong. In fact, we have something like 240 companies that are already in the pipeline, and the first to date, August to date, we have close to 130 companies already listed. That number is basically the same number of the last year, entire year combined. We raised 187 billion Hong Kong dollars to date. That again is pretty much the amount of money that we raised, last year in a whole year. So we haven't even gone into the third quarter. The third quarter and part of the fourth quarter usually is the peak for IPOs. But obviously this second half is different from the last second half. This second half vis-a-vis the first half is going to be quite choppy. Market is going to be a little bit directionless, and simply because people just don't understand and don't really see how this overall trade war is going to go and how the market is going to ultimately react to it. So with that, the volatility is going to be up second half. So trading environment is going to be difficult. But I think, IPO market in Hong Kong, in Asia in particular, in Hong Kong in particular, typically happens the third quarter and first part of the fourth quarter.
Mr. Li, your chairwoman also warned of a dark clouds over the global market for the year ahead. What will weigh on your performance looking at results moving forward?
Well, it's really the overall trading environment. Exchanges are largely, depend on trading. The bulk of our revenue come from, the actual charges we make on people trades. So how many people are trading, how actively they trade, how deep is the trading, ultimately dictate our earnings results. And I think second half is going to be a lot more challenging than the first half.
Mr. Li, you are uniquely qualified to comment on this with your heritage at Merrill Lynch and then as chairman of J.P. Morgan China. And that is the effect of the President of the United States and his discussion on tariffs and trade with the new China and what it will mean for American international banking. Is the president going to impinge the ability of J.P. Morgan and other major American banks to do the marginal revenue dollar in China?
I don't really necessarily see the direct relation yet, because the phenomena we're seeing today is so unique that nobody would have anticipated the kind of challenges that we are in today. So everybody's in new territory, and but I think China, despite all the current dispute and the conflict that need to be resolved on the tariffs itself, the broader direction that China has to open more. China probably will allow more service companies, more financial services in particular, to come to China is probably the direction to go. So rather than actually thinking that this is going to be an immediate negative reaction against American companies trying to seek a foothold in China, this may actually be potentially, looking back after, those challenges are behind us, that might be actually the catalyst opportunity to lead to a faster opening of China's domestic market and giving international firms, a better chance. So that, I actually think this is probably over time is going to become a positive rather than a negative. I don't really think China will take a retaliatory action, on that particular opening, because that opening is good for China itself.
Mr. Li, I'm looking at a pretty dismal performance of Xiaomi's, share price. Have you learned any lessons from that listing?
Well, I mean, us, the exchange operator, we don't really get obsessed about second, post-IPO performances. We love them to trade well, so everybody's happy. But on the other hand, in a difficult market with a very big deal like that, with the valuation level like that, I think getting a deal done is pretty amazing. And I think, a lot of very big tech deals, have done with a very massive first day of trading or first months of trading. Some of them don't do that, but eventually, everybody turned out to be fine. If you're a real good company, if you have a strong business model that is sustainable, you will succeed.